A very warm welcome to all investors gathered here today. We are live with the 8th episode of Future Trend Power Series with our Chief Investment Officer, Mr. Sunil Damania. Today's event would be understanding 5 key trends. Without giving away much, I'd like to hand it over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome. Unfortunately, Mohit is not able to join because some urgent meeting has come up. So sorry for that. And that's the reason we need to reset the complete studio, thinking that there will be 2 people, but now only 1 person. So since a lot of time has already gone, let me start hitting that subject matter immediately. So just before we start this webinar, just a disclaimer that this webinar is only to enhance your understanding about the equity market, about the sector, about the trend happening in the market. Is no way a recommendation to buy or sell. In case if you decide to buy or sell, please consult your financial advisor before doing any buy or sell transaction. Remember, when you invest in the market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for future performance. With this, let me start, as Jason anyway said, 5 trends that we are going to discuss today. If you remember, in one of our trend analysis, we discussed about why should you be putting money in Nifty 50 equal index and not Nifty 50. I hope how many people remember that. And we showcase that with the statistical data. Today I'm going to discuss about how US market and Indian market has been, even though both are in green, but within the green there is a different side, am I right? So and that's what I'm going to discuss about that. We all know that 2,000 rupee note is going to go out of a circulation, and there was a fear that because of that UPI transaction could get impact. And I'm going to discuss about what is happening on the UPI transaction because of 2,000 rupee note is going to go out of circulation. India's CPI inflation coming very closer to the RBI comfort level. Should we expect further decline in the CPI or not? That I'm going to discuss about that. I'm also going to discuss about how food prices globally are coming down despite the global warming, and I'm also going to discuss about, auto index is just one of the best index in 2023. And if that is so, what are the factors driving? And one good thing is that decline in the input cost. I'm going to discuss those. So let me start with my first divergence between market cap weighted index and equal weighted. So let me look at this. Now this is an S&P 500 US. Okay. And in US, what is happening? The few stocks are driving up the S&P 500. And that's why you see this 114% gain that happened in 2023 is because of few stocks. Why I'm saying few stocks? Because if you look at the equal weight index, it was actually till 31st May, it was in red actually. Despite this was in green. It started moving up because this rally in the US is very, very narrow. So while S&P 500 is up by 14% in 2023, the S&P 500 equal weight, you understand equal weight and the normal index. Equal weight is basically irrespective of your market cap, each company would have the same weight. While in S&P 500, based on the free float market cap, your weightage would get decided. So few companies moving up can drive the indices higher. And in US, this rally which we are talking about S&P 500 is very, very narrow. It is not broad-based. But in India, look at it, is exactly opposite. While S&P 500 was up as compared to S&P 500 equal weight index, in India, the Nifty 50 equal weight index is higher as compared to Nifty 50. In other words, not few stocks are driving in the Indian, even within the large cap. I'm not talking mid and small cap. Now, what is the importance of that? The importance of this is that this rally can get sustained. The Indian rally can get more sustainable as compared to the US rally. Why? Because the few stocks are driving up, and the moment they stop moving up, the rally can fizzle it out. While in India, it's not a function of one or two. It's a function of many. And that's why the Nifty 50 equal index has done very well as compared to Nifty 50 index. So which clearly shows that Indian market seems to be more stable and more broad-based as compared to the US market. So sometimes, we said US market has gone up, Indian market has moved up, but that moving up has a different, and we always believe in going more granular to get sense of what is happening. And the moment you go granular, your perspective about the market undergoes tremendous change. Now we all know that 2000 rupee note is going to, and we did see some dip in the UPI growth, year-on-year growth, coming down from 46% to 43%. Am I right? And it further increased in the month of June. So a lot of people, when they went out for restaurant or for buying goods or buying, filling up their fuel of the car, they started using 2000 rupee note. Invariably, when you use that, you are not using UPI. And after that, some dip, I think the UPI transaction are again back. And what we look at it, it's a 1 year high kind of a stuff. If not 1 year, but it's from October 2022. So it's growing very. Of course, with the data we have taken till June 11 June, and we basically tried to adjust for the month. So very good growth. So in other words, 2000 rupee note had temporary impact on the UPI transaction, but it's bouncing back very strongly. In other words, whoever wanted to use the 2000 rupee note in terms of using it seems to have used that. And in fact, RBI governor did mention that more than 50% has already come back to the bank in terms of 2000 rupee note. So that's already been happening. Now let's look at the retail inflation in India. And I think what a happy sign to be, am I right? RBI has a limit of a target of 4%. We were at 4.25% for the month of May. But mind you, don't expect this trend to further go down. I'll explain you why. The reason is very simple. We do expect, this is my personal view, not MarketsMojo view, we do expect that trend will get reversed by July to August of 2023. Monsoon is a key factor to watch out because that could also disturb the inflation trajectory. So I think we are trending down, but don't expect too much now further down. In the contrary, we can move up. And the reason why inflation is coming down across the world, there are some reasons for that. And I'll explain you the food price inflation. Okay, on one hand, we all talk about the global warming. Am I right? And despite the global warming, which could impact the production of foods and grains, the prices are coming down. So you look at this index. This is from FAO, and these prices are coming down drastically. 158 to 120. This is an index that I'm talking about. And the reason is very simple. Supply has improved. There is a weak demand. And re-export from Ukraine through the Black Sea route continues there. So that really helped to cool down the food inflation. My sense, my personal opinion again, I do expect food prices to start moving up. If I have to come again in front of you in June 2024, this trend would have reversed. And this is one risk which we must all remember, that right now food prices are coming down is not going to sustain at that level for a longer period of time. One is definitely the base effect will come into play, but second thing is that if the monsoon has to be a little struggling in a country like India, it could put some pressure on the inflation. Now, auto industry is doing extremely well, am I right? And one of the reasons why, so what we have tried to do is that, what are the key components? So see, if you look at any auto company's profit and loss account, more than 70% of their cost comes from the raw material cost or the percentage of sales. Now, the raw material prices have started coming down very drastically. So what we have done, we have taken May 2023 data of the raw material prices compared with May 2022 and tried to understand what has been the trend? Whether it's a crude oil which you use in auto, you don't use crude. Of course, you do use crude. Derivatives do get used, but you basically use petrol and diesel. That has not come down. Why? Because the government has maintained the prices same because of previous under recovery, and that can come down. That could also further ease pressure on inflation going forward. But that my sense is that will happen more towards election than now, because the government would also look at the timing. But crude oil price come down by 36%. Zinc Y-on-Y down by 34%. Polycarbonate, which gets used in the auto industry as input cost, down by 29%. Palladium, polypropylene, HR steel, carbon black, which get used in the tire, alloy forging, which goes into some of your product that you make, auto cancellery में जाता है वो, natural rubber, and virgin aluminum. They are all coming down. And due to that, do expect auto companies' margin to expand. Why? Because the raw material prices are coming down. Now, this is the two trends that we are discussing about today, positive and the negative. What is the positive trend? The US CPI inflation, you look at it, 9.1% coming down to 4%. And that's one of the reasons Fed did not hike in its last monetary policy interest rate. Okay, so it's a trajectory is going down and very sharply. From June 2022, 9.1 to 4%. I think it's a very, and this is the beauty is this, without impacting the growth of the US economy. I think it's a very, that's a good thing that to happen where US inflation is coming down sharply. The negative trend is that if you look at this data, so you compare March 2022 versus March 2023, it's down. If you look at April 2022 versus April 2022, this is merchandise exports. And if you look at the May 39,400 versus 34,980, 3 months in a row, India's exports, this merchandise exports, has not declined. And the reason is very simple, because of globally the demand is little less. And since the demand is little less, it's impacting the merchandise exports. The only silver lining, if I have to say so, is that month on month, if you look at it, it has been declining, am I right? But if you look at month on month, in the month of May, it increased to 34,980 million, that is 34.98 billion, as compared to 34.73 billion. So I think some improvement I've seen month on month. It's very difficult to say this trend would be sustained or not. But if you look at from here, we have seen constant decline, and then we saw constant increase, and then again we saw constant decline for 2 months. So today, the merchandise export is an area of concern, and I think government must need to look at it just to ensure that our merchandise export starts moving up, because China plus one policy, if that has to happen, then it should reflect in our merchandise exports. What are the major news this week? I think SIP, which is the more disciplined kind of a stuff, the AUM is increased and it reached 7.5 lakh crore in May 2023 as compared to 5.16 lakh crore in May. If you are planning to buy TV, mobile or laptops, my request to all of you, please wait till Diwali. Why am I saying so? Because the price of semiconductor is coming down. The freight costs have come down drastically, and that should all benefit some of the electronic items. So if you are planning to buy, please hold on. You should get it at a cheaper price. Record number of passenger traveled in the month of May. FII love for India continues. They've invested 16,406 crore in Indian market month to date. And somehow, despite valuation, despite so-called this one, they do see value. Sometimes, our Indians are more skeptical about India's growth story, but foreigners are more convinced. And that's the reason they are pumping money left, right, and center. Even though the Sensex and Nifty moved up by 1.2 to 1.4%, but I think the more action is happening in mid and small cap. So we saw Nifty 50, where equal weight index was moved done better. But forget about Nifty 50. Even the broader base, I think the rally is expanding. So more companies are advancing as compared to declining, and I think that gives a very good reason why this rally could be more sustainable, more legs to it because of the better advance decline ratio. As you all know that we are celebrating our 8th anniversary, this is the 8th anniversary month, and you have an exclusive opportunity to extend your subscription as many times as we want at the lowest price that you ever put to the MarketsMojo. So your lowest price becomes a new extension price for you to enjoy. This is a very limited period offer, and it's in a way to say to our loyal members, thanks a lot being a part of MarketsMojo family, and we want to, as a matter of gratitude, want you to avail this offer immediately. So I'll request my colleague to just drop the link and let's open the floor for question answer. Over to you, Jason. So Jason, I've saved a lot of time in terms of the presentation, so we can have more longer question answer.
Yes, and before I move on to the Q&A session for today, we did receive this particular question yesterday, and since you're actually drinking water, one of the investors said, "Dear Sunil, we mostly see you consuming water from small plastic bottles on webinar. As you know, plastic is non-biodegradable and very dangerous for the climate. My humble request is to use a large glass bottle and maybe pour it into a glass for drinking water."
Thanks a lot. I think I distinctly recollect very similar kind of concern was expressed a few months back also, and we have not learned from that. Okay. So I promise you, and I think henceforth we'll stop using, at least I'll stop using, I will not say we, but at least I'll stop using the plastic bottle, and I'll try to see that if I use something which is more durable bottle, so that we don't harm to the environment. Thanks a lot for your concern, sir, for the environment, and thanks a lot. So we appreciate this. Thanks a lot. Thanks, Jason, for taking up this question.
Yeah, this next one by Mr. Frank. The market thinks the Fed is wrong. Well, that's why that's dangerous. The market has made up its mind on the Federal Reserve's view that 2 more rate hikes are needed. It just does not believe it. There was a time earlier in the cycle where a hawkish surprise would have sent stocks sharply lower. The opposite has happened. What's your take on this?
So, Frank sir, it's market is like a Teflon sometimes. No negative news will stick to it. So it's all the function of sentiment, undercurrent, which is there in the market. And we have observed many times in the past, and we'll observe many times in the future also. When your sentiments are weak, even if the not so negative news will also market very badly. But if the sentiment is good, even if the negative news is there, it is not going to impact too much. And I always keep saying this in a parlance of your health, for example. If your immune systems are strong, even if there is a virus attack, it's not going to impact you so much. But if your immune systems are weak, then even a not so lethal virus, very normal virus can also put you down. So I think right now the undercurrent in the market is very, very strong, and I think market choosing to ignore this kind of a factors. He said, "Hoga tabhi dekh lenge. Why to worry now?" And that's what is happening right now, not only in India, not only in US, but globally. And that's the power of sentiment. Remember, if sentiment is good, the market will act like a Teflon. No negative news will stick to it. No negative news. And that we have seen somewhere in 2021 also. Am I right? कितना भी negative news आया, market को कोई फर्क नहीं पड़ा. And in 2020 was exactly opposite of that. Even if the good news came, market did not believe in that news. Every rise was an opportunity for people to get out of the market. So that's what has happened. So I think that's very normal, Frank sir.
Okay, this next question by Mr. Satish. So, what's your view on electronic sector stocks?
So Satishji, my sense is that electronic sector should do extremely well. Why? Because India is going to be the big manufacturing hub for the electronics. And in fact, India, if you look at the government of India plan for exports of electronic items, is unimaginable. So I think electronics as a sector should do extremely well. Now you need to be a little mindful which company, because sometimes the sector may do well, the company may not do well. Am I right? So be careful with what sector. I'm extremely bullish on sector. Extremely bullish. I think we are underestimating the power of India as a hub to export electronic items to the, and we will be the the major supplier of electronic items across the world.
Okay, next question by Vineet. When will MarketsMojo start reviewing SME IPOs? I got one lot of IQ writing. What should I do with it now?
When we'll start rating IPO, see, SME IPO will not do that for the very simple reason. I don't think it's a story of fundamental. It's more of a story of the speculative element on the IPO. At what price? Because the limited liquidity, someone can easily manipulate. When the liquidity is little limited, it's easy to manipulate. So is it decision we said we don't. So you got one lot of IQ lighting. I think I would suggest you to please move out. I think it got listed at premium. I'm not very comfortable holding the company at this price. Please get. In fact, on the contrary, we are advised not to go for the IPO in IQ. Why? Because valuations the companies has been asking is very rich. Is a single customer accounting a substantial portion of the revenue that doesn't give a comfort level to invest in that.
Okay, moving on to this next question. This is by Mr. Praful. Hello Sunilji, the Nasdaq is only going one way, which is up, and somehow Indian IT is not performing, even though previously Indian IT index would mirror the Nasdaq. Should one park more money in US market this year versus the Indian market? Your thoughts on this? Also, what's your long-term view between India and US in dollar terms?
So that's a brilliant question, Praful. I'm very happy that you asked this question. So my sense is that you all know that we are bullish on Indian IT sector. See, within the Nasdaq, we need to all understand that only few stocks which are related to the artificial intelligence are moving up. The likes of Nvidia, the likes of Alphabet, likes of Microsoft, and so on and so forth, because they are all linked to the AI platform. And that's why it's moving up. But you would have seen that graph that I talk about S&P 500 versus equal weight versus the S&P 500 normal, how the divergence has been there. So your question, should I park more money in US market this year versus Indian market? My answer is no. I believe Indian market should, even in dollar terms, should outperform the US market. Long term, I think long term India has always done better as compared to US, even in dollar terms. And hence, I believe strongly that India would be the growth driver for the world. And I think the rally that we are going to see in the Indian equity market is unimaginable. If you remember our webinar on 30 is equal to 5, I think it's been what we have stated there, we continue to believe that's going to happen. I think Indian market is going to surge like never before. The kind of wealth that we all created in the last 30 years from the equity market, we are going to create that similar kind of wealth in next 5 years. And I think we are on the journey. There could be some hiccups, there could be some speed breaker, but eventually we are going to reach to that destination. So please, if you have money and if you have no reason to diversify to US market, please continue investing in Indian equity market. Even in dollar terms, in next 4 to 5 years, India would offer substantial alpha over US market.
Okay, this next question by Rohan. So why all shipbuilding companies are performing good now?
I think, Rohanji, that purely because of the government focus on defense, and defense is a good theme that is being played out. That's the only reason why we see all company doing extremely well. India wants to have a very ambitious plan, not only for the Atmanirbhar Bharat, but we also want to make India as an export hub for product like this. So our view on this complete sector is extremely bullish. We have said time and again that defense is one thing which is going to play out extremely well. And that's, if you remember, we also recommended one Garden Ridge as a Garden Ridge shipbuilding as a stock of the month, and that has also done well. And we continue to believe that companies should do extremely well.
Okay, moving on to this next question by Mr. Modi. How is textile sector going to do in coming days? I would like to know on Trident.
So, sir, I would request you to look at our score on Trident and take a call. Trident is also into exports, so I think they will see some headwinds coming in because of merchandise export is facing some amount of a pressure. Textile, I think, is going to remain a little subdued. There will be few companies here and there that could do well, but overall, I'm not very bullish on textile as a sector. So I think this sector should face some headwinds going forward.
Okay, moving on to this next particular question by Mr. Anil. Sunil bhai, now that the indices have hit their highs, do you see the market stabilizing or do you see volatility like the last 1 year? Also, are you still convinced on Nifty around 21,000 by 2023 end?
So, Anil ji, yes, I do expect market to be volatile. I don't expect market to have a one-way street. Yes, it has not happened, but I do believe there will be a volatility. What could cause volatility, what news can hamper the market sentiment, I don't know. But do expect market to remain volatile. And some of the companies within the medium and small caps are running ahead of the fundamentals. So there could be some bubble getting formed there. That's for sure. Am I still convinced that Nifty can touch 21,000 by 2023 end? Our view on the Nifty for the year end is 20,100, not 21,000. So we still believe Nifty should touch 20,100 by December 2023. So we do expect market to move up even from this level. We have been maintaining that since beginning of January, and we continue to believe that's going to happen.
Okay, moving on to this next question. Actually, Ankur has said that he has checked the IPO page and mostly all IPOs were advised to avoid. However, 80% have received substantial listing gains. What's your opinion on this?
So Ankur ji, we don't, so if you remember, when we launch IPO section, we always say, these are not for the listing gains. Listing gain is more of a function of the grey market and the speculative element and so and so. When we say avoid, we say this avoid based on the business model, management, quality and so on and so forth, which will play out normally in medium to long run. And hence these are not, so this, okay, our IPO page is not for, IPO recognition is not for listing gain. It is more for gain from the fundamental valuation point of view, medium to a long term. So that's what we normally say. Because see, some of the companies that they are coming out with an IPO, they don't deserve to come out with an IPO, to be very frank with you. The quality of books that you look at it, quality of performance that you look at it, is not been so great. If you look at some of the companies like Radiant Cash, 5.4% down on listing, Elin Electronics, 32%, which is avoid again. KFin Technology, down by 0.53. If you look at Uday Siva Kumar Infra, down by 7.3. So yes, some companies have given listing gains, but some have also not done well. So our sense is that we will look at company purely based on not grey market premium, but what could be the future business model of this company and whether it can create wealth or not. That could be the driving force behind recommending company as a buy, whether you subscribe to IPO or not. That's what the philosophy we believe in.
Okay, moving on to this next question by Jigar. Good evening, Sunil sir. Please share your personal view on Ratnamani Metal and Bank of Maharashtra. They both are buy and have a good Mojo score plus CFT score, but hardly any upward movement. Should I continue to hold or switch or accumulate more?
Please continue to hold. Don't hold more. Or do not accumulate more. Please continue to hold and just post June numbers again. Revisit this company. So in next 1 month or so, we will also get the numbers coming out and post that we need to take a call. Right now, please hold.
Okay, moving to this next question. This is by Mr. Yadvendra. So lots of gratitude. Your view on 5G stocks. Will this sector boom, particularly HFCL stock?
Again, look at the score. I think HFCL also got some order which yesterday they received. But so I don't know what do you mean by 5G stock? Are you referring to the telecom companies like Bharti Airtel and Vodafone and Reliance Jio, or I don't know what you are referring to? HFCL. So this company, had its own share of volatility and so on and so forth. And once upon a time, it was darling of the investors when the Y2K boom took place. And then it lost the fancy and so on and so forth. In last couple of years, again, it's come back very strongly and did reasonably well. In last 3 years, it's up by 456% or so. Right now, our system, our IP says its company may likely to underperform with the sell recommendation. So my advice would be not to buy fresh. In case if you are holding it, maybe you should revisit your whole strategy and maybe move out of this and invest that profit in any of the Mojo stock.
Okay. This next question by Ankur. MarketsMojo suggested a sell Tata Motors at 432. It has gone up substantially. Why doesn't MarketsMojo suggest a buy or strong buy before the prices go up?
So Ankurji, you are right actually. Sometimes our IP is not able to. So we are not saying we're 100% right. Am I right? And no one could be in the world could be right 100%. So some of the instances, yes, we do go wrong. And Tata Motor is one which we have gone wrong actually. Our IP is not. Right now it's a hold, sir. So my suggestion would be, please, if you're not sold it, please continue to hold because right now the things are improving for Tata Motors and they did the analyst presentation and I think they have a very ambitious plan in terms of this one. I must request all of you, Tata Motors released annual report yesterday or today, I believe. And the report is very, very interesting. I would request everyone to please read that. It's in 2023, the scrip is up by 46.7%. The scrip has done extremely well in 2023 and right now the probability is very high it can do further good from this level.
Okay. Moving on this question by Mr. Mubashir. Namaskar sir, इस साल FI का net inflow कितना हो गया है?
मोबिल सर अपना FI का जो टोटल नेट इनफ्लो है आई विल जस्ट टेल यू सर. Just 2 minutes, I'll tell you what is it. सिर्फ 45,000 करोड़ हो गया अभी तक. हमारा जो प्रेडिक्शन है पूरे साल का मिनिमम 1 लाख करोड़. तो वी आर मूविंग इन दैट डायरेक्शन ऑफ 1 लाख करोड़. अभी तक हुआ है 45,665 करोड़ नेट इन्वेस्टमेंट.
Okay, moving on to this next question by Mr. Mohanty. 3 or 4 stocks whose price increased from 50 to 300%. Titagar, Wagon, Apar Industries, KI, Saxoft. IP is very effective in selecting stocks, but less effective with respect to exit price. What's your view on this?
Mohanty sir, I wouldn't like to agree with that. Why? Because we continue to hold Saxoft in our, of course, someone where we might have asked book profit, that's a different story. Apar KI done extremely well, am I right? But that's how the market behavior is, am I right? Some company will do well, some company will not do well. So we are really good in terms of selection. We were not so great in terms of exit and we've improved a lot. Had we not improved on that, Mohanty sir, the many portfolio would not have gone up substantially. In fact, I got very nice comment and if Dr. Saab is there on that on this webinar, I would like to read for everyone, okay? So what did he say? This is Dr. Satya Kumar Saraswat, okay, and he wrote, just wanted to let you know that the returns in my Mojo Infinite are unbelievably high. An alpha of around 14%. Whatever may happen in future in sometime something uncertain, but I want you and MarketsMojo team to know that I am totally in awe of your entire system. Absolutely unbelievable. So such this kind of a comments can only come when our entry and exit is good in terms of creating wealth for the investors. And we have all seen that portfolio have improved substantially in last couple of months. Yes, there could be some places where we would have exited early or we would have exited late. That has happened in the past. That can happen in future also. I must tell you that also. हम लोग कोई भगवान तो है नहीं कि हमारा कोई गलती नहीं जाएगा. But we will make less mistakes as compared to overall market, and that's one of the reasons people have been able to create alpha on their portfolio. सर सारस्वत सर आप डॉक्टर सर आप हो तो जो हाँ कीजिए बिकॉज जेसन इन केस इफ इज देयर जस्ट पिक अप हिज
Sure.
क्वेश्चन या
Okay, this next question, this is by Mr. Vinay. The negative trends do not point to the war and reoccurrence of the endemic. Is it that the market no more considers it as a risk on the ongoing issues?
No, regarding war or regarding the merchandise exports?
I think he says war and the reoccurrence of an endemic.
Reoccurring of the endemic. सर endemic हो तो फिर क्या टेंशन है, वो तो रहने वाला है. Then it becomes a part of your life, am I right? You don't get now concerned about cold, which is endemic, am I right? Common cold. So even WHO came out with a statement that it is no longer a global threat. So it's going to be there. War, I think market is discounted. But see, remember, market will always react to one particular news for some time. If it continues, market will move on in life. It doesn't have to basically bother about that thing forever, right? Because market has other factors to discount for it. So I don't think it's going to be. So let me tell you one thing. Because of war or because of endemic, market is not going to go down. For this news, it can go down for some other news. It's a different story. But these two news are not going to impact Ukraine-Russia war or any kind of a virus, the one which is there. For some reason, if some new virus comes in, then it could pose a problem. But otherwise, there is no kind of a concern at this point of time.
Question by Mr. Shyam Sundar: is bubble in the making for defense stocks?
No, sir. I don't think there is a bubble in the making for defense stocks. If you look at some of the valuations of the defense stocks, are they still very, very attractive? There is no kind of a bubble that looks like it. Right? There is no kind of froth that can come off. So we don't agree with that statement or assessment.
Okay, this next question by Mr. Arshit: should we buy good dividend yield IT stocks now?
So Archit sir, I am not a very big fan of dividend stocks. I always say buy company if you think this company can give me good capital appreciation, and that company happens to be paying good dividend. तो सोने पे सुहागा. But your reason to buy because it's giving me dividend yield is not a very great idea. So I would not be recommend that kind of a stuff. Please use our Mojo score and then buy, because our Mojo score will not recommend buy because of high dividend listings. It's recommending buy because we see a potential of a capital appreciation. That's why we're recommending buy, isn't it?
Okay, this next question by Mr. Devish: Brightcom and Suzlon has had a dream run in the last few weeks. Why Trading 80 can't locate it? Is the calls based on IPO manual?
So Trading 80 is completely based on the IP. There is no manual intervention there. Basically, the system generate call. I don't know why Brightcom and Suzlon has not come. In fact, in Trading 18, so I will not be able to comment on that. But it's not that MarketsMojo, our Trading 80 platform will be able to pick up all the up moving stocks as a buy. It will not happen. Ideally it should happen, but nothing happen in the real life. Am I right? So I don't know whether they have Brightcom and Suzlon and not come purely because IP would not have selected. There is no manual intervention there.
Okay, moving on to this next question. This is by Mr. Puneet. Hi Sunilji, when is the PMS launch date? Mo did say May end and now June end. Will this happen anyway earlier?
No, it's not going to happen earlier because I think it will happen in June only. Most probably the last week of June. We just had a meeting before coming for this webinar, and we were just trying to take a stock of in terms of our process, in terms of our documentation and so on and so forth. And we realized that it will still be a little away in terms of launching, because we don't want to launch when things are not in place, because if things are not in place, it can create a lot of chaos which we don't want actually. So I think most probably we are going to launch in the last week of June. We'll come in front of you. I know Mohit has said, Punitji, end of May, and now end of June. I think end of June looks more possible right now as we speak.
Okay, this next question by Alkesh. Is it a good time to invest in companies on MarketsMojo with identified positive near-term drivers, or simply invest in Mojo stocks?
So Alkesh, I am of the opinion, and of course my view can be different than what Mohit's views could be or what Jason's view could be. I always prefer Mojo stock. Why? Because Mojo stock, to become a Mojo stock, it has to satisfy the overall. That means it take into concern quality, valuation, recent quarterly financial performance, and technical. The near positive drivers are only function of two things. It's not a function of four dots, am I right? So I always prefer to have a four dots, combination of four dots as a score to select the company. That's my comfort level. Mohit may have a different answer, Jason may have a different answer altogether, but this is my personal opinion.
Okay, this next question by Sagar. Hi Sunilji, your view on systematic withdrawal plan for regular income from equity or mutual fund, and how to handle withdrawal in bear market, as while withdrawing in bear market, it may take out capital. So how to handle on the situation?
So, these are certain, systematic withdrawal plans. So, I'm not a very big fan of that, to be very frank with you. Okay, so I don't invest in mutual fund. So SIP or SWPO, may kabhi nahi. See, I have a very different philosophy altogether. What is the philosophy? I said, I will never put money in the equity market which I need for next 3 to 5 years. So moment that thought process comes into your mind and you are going to put only those money which you don't need to run your daily household expenses, then you are much better in terms of your returns on this. In systematic withdrawal plan, what is going to happen? You are putting, like assets liability mismatch बोलते हैं banking में, ये वैसा वाला हिसाब है. First you put money and then every month you keep taking money out. Now you'll be forced to get out of the market during bad time, which you rightly said is going like basically taking out your capital, which is not in your interest, am I right? So my request, if you need, for example, you need money for next 1 year, don't put that money in a mutual fund, equity scheme. वो पैसे पहले से बाहर निकाल दो, maybe you can create an FD of 3 months, 6 months, and so that, as and when you need, the maturity is there, and which basically helps you, because market by nature is volatile and you'll be forced to invest those funds which you don't need for next 3 to 5 years. That's the best way you should. If at all, if I have to invest in mutual fund, I would put it this way. I will not ever do SWP, because to run my daily household income, I will never do that. Expenses, sorry.
Okay, this next question by Rajesh. What are the prospects for United Spirits?
So I don't take this company because I don't drink. So and I don't invest on the company which are related to the liquor. So the script is sell in our system. Probability is very, very high that this company can underperform. So my advice would be, please stay away.
Okay, this next question by Vineet. कब होगा holding an insurance company इसका score available?
It is just that everything is done. Only thing, my head of technology has to make it live. It can happen today, it can happen on Monday, it can happen in next week also. Depending, see, we are all busy with PMS, to be very frank. Let me also be, we are just trying to tie up some of the loose ends so that we don't run into a problem in terms of. So my head of technology is busy with the PMS. And once that is done, I think both holding and insurance company can go live. In fact, all testing has been done, all data has been checked, so there is no issue on that. It's just that he needs time to look at the code and make it live. So it's just that's a thing. So either it can happen tomorrow also, and it can happen by next week also, and it can happen 1 month also, depending upon how soon, and we don't face any problem in our PMS launch. If we do face a PMS launch problem, then it can get further delay.
Okay, I can just consolidate a lot of questions asked by some of the investors. They asked that can we see some significant correction in the short term?
Should we expect? That's what the question is. So it can happen, it may not happen, to be very frank. Like Anilji asked me, do I expect market to volatile? I do expect market to remain volatile. What do I mean by volatility? It can move up, it can move down, again move up. Now, trying to time the market is very, very difficult job, sir. So my advice would be don't try to time the market. Remain invested. मैं एक रुपया नहीं निकाले market से क्यों? Why? Because I'm not good at timing the market, and my money I've invested for minimum 3 to 5 years. So even assume there is a short-term volatility. Short-term the market may go down. How does it matter? Did you move out of the market in October 2021? Did you move out of the market in December 2020? No. There was a tough time for the market investors to be in the market. I distinctly recollect, our Infinity customer, she got panicked. And this is in December 2022. She lost confidence in the equity market. She lost confidence in the Infinity. And she exited. Had she not exited today, her portfolio would have been different altogether. So the point I'm trying to say is we all want to time the market, thinking market all नीचे जाएगा, this and that. Don't do that exercise. आप मार्केट से ज़्यादा सियाना नहीं हो सकते हो. मार्केट बहुत ही सियाना है अब हम लोग से. The collective wisdom of the market is much, much superior than your and my wisdom. Am I right? So remain committed to the equity market, remain invested. Don't try to time market. Yes, market will remain volatile. I'm saying so. But when the market goes down, you will not have guts even to put 1 rupee. Forget about 1 crore. See, I'll give you a very classical example. I will not name, but some investors, when I asked them to invest, in December 2022, नहीं बहुत हो गया, अभी पैसा नहीं डालना है मार्केट में तो बहुत मंदी है. The same set of customers are now coming and asking me, should I put money in June 2023? They're asking me that question. जब मार्केट खराब था तब आपने पैसा डाला होता तो आपका बहुत पाबंदी है. Do you not have a guts? And something similar happens. So tomorrow, for some reason, markets to go down, the more story will come in the market that why market will further go down. That will never ever allow you to put money in the market. So I think it's a function of sentiments. So my advice, don't do that. If you have money you don't need for next 3 to 5 years, please go and put money in the equity market. But you need money in next 3 to 5 years, my advice would be don't put a single rupee.
Okay, Mr. Sunil, that's with the Q&A session for today.
So thanks a lot everyone. Once again, sorry that Mohit could not attend this because he has some emergency meeting coming up. I hope you enjoyed this trend analysis. Do write back to us in case if you want us to carry any trend analysis which is of your interest, and we'll try to see what best we can do about it. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and thanks a lot everyone for attending today's event. We'll be also sending all the invites for the future webinars. Goodbye and have a great weekend. Thank you so much.